Hey, do you know a fundamental shift in the UK GAAP is on the horizon? One that dramatically changes how companies report their lease obligations. For a period beginning on or after 1st Jan 2026, the lease accounting rules under FRS 102, or you can say a UK GAAP, are changing. For lessees, this marks the end of the balance sheet operating leases as we know it. To understand the impact, let's recall the current pre-2026 model. We operated under a dual system. Leases were classified as either a finance lease or an operating leases. Finance lease, where you effectively own the risk and reward, were capitalized. You recognize an assets and a liability. Operating leases, however, like your typical office or vehicle leases, were treated as a simple rentals. They were kept off the balance sheet, with a straight line expense hitting the P&L. The new standard dismantles this dual approach for leases. We are moving to a single right of use model. The key question is no longer what type of lease is this, but simply is this a lease or not? Under this new model, for virtually every lease, you will recognize a right of use assets and a corresponding lease liability on your balance sheet on day one. The liability is measured as the present value of future lease payments. Now, are there any exceptions? Yes, but they are very specific. You can elect not to apply the new rules for short-term leases of 12 months or less and for leases of low-value assets. Crucially, there are no exemptions for your major leases like property, vehicles, significant equipments. These must go on to the balance sheet. Now, the next question would be whether it would be considered as a policy change or an estimates change. This is treated as an accounting policy change and is applied retrospectively. However, the standard provides a major practical relief. You do not need to restate prior years. You will use a modified retrospective approach. This means that you recognize the cumulative effect of applying the new standard as an adjustment to the opening retained earning at the date of the initial application. For example, 1st Jan 2026 is a calendar year for a company. You will not go back and restate your 2025 figures for comparison. This significantly reduces the implication burden. Now, if I'm going to conclude here, a successful transition requires a comprehensive review of all active leases as of the effective date. To ensure a smooth application and mitigate risk, we recommend initiating our data collection and impact analysis immediately. Thanks for watching.